Wait a sec. Hold on. You don't know exactly how much you're risking per trade, and you want to be a successful forex trader. Let me show you something quickly. Now guys, this is a back tester. This is an application we use to back test strategies. Shout out to Trading Rush. Right, so we're going to be showing you a back test of a strategy where we are consistently risking 3%, just 3% of the account consistently. You're going to see how the equity curve turns out. Right now, as you can see, this is a fresh slate, win rate 0, total number of trades 0. So we're going to begin. You're going to see exactly how consistency works, right? It now will make 11% profits added, loss added. We just keep adding the loss and the profits like that. Now this figures you're seeing there in percentage, and the three you see under the add on top of the add loss is 3%, and on the other side add profit, you see we put 3% profit. Right, the next profit we made 8% profit. Now when you're placing your trades, it's important to have a very good reward to risk ratio. As you can see, this one is high, 33%. It's important to have a good reward to risk ratio so that over a period of time you have an edge over the market. It's very important. So we keep going. Strategy already back tested. We're just imputing the results on this app. Now we go 13%, we add our profits. Loss is still 3% consistently, right? 6%, 9%, we keep going, 3%, and so on and so forth. So we're going to continue this with all the trades. We had about 69 trades. We backtested about 69 trades. So we're going to impute all the figures. You're going to see the win rate. You don't even need to have a high win rate, guys. You don't even need to have a high win rate. You just need to have consistent risk management. You'll be surprised how this works. Your risk just has to be consistent. Your win rate, it doesn't have to be high, so long as your reward to risk is okay. As you can see, our reward to risk is obviously okay. We are risking 3 and we made 10% on this one. We risked 3, still made 3. This is a break-even trade. We usually call it break-even trade. Now the results, we are done. Starting balance 0, current balance 199. See how beautiful the equity curve is. Now let's look at the list of trades. You see, we didn't even have to win every trade. We lost several trades. At some point we lost 7 trades in a row, as you can see. Sometimes we lost 8 in a row. We didn't even have to stay winning all the time, right? See how beautiful the equity curve is. See how beautiful. Our current profit now is 199%. That's insane for a 46% win rate strategy. Now we're going to do another back test. Right now, this time around, this risk is not consistent. We're not risking just 3%. This is a fresh slate, as you can see. We'll start imputing. Now we first of all made 60, 56. Just be watching the loss, right? Pay attention to the loss. You'll notice it's not consistent. It's not consistent at all. Sometimes we make 20, sometimes we make 60, sometimes you get it, not even making, we lose 20, lose 60, lose 50. The risk is just inconsistent. You get it? The risk is very inconsistent. Now we continue. 16 profit added, and so on and so forth. You're going to see how this inconsistency affects the equity curve. So you'll find out that you're placing trades, you're just going back and forth, and you realize you're just going around in circles. You've been trading for a long time now and you've not made any profits. At the best case scenario, you're breaking even. So you go up, you come down, you go up, you come down, go up. The reason is your risk isn't consistent. Your risk isn't consistent, and therefore your progress will now be very slow. Guys, progress will be very slow. So you have to pay serious attention to your risk management, very serious attention. Otherwise, it's going to mess up your game. It's going to mess up your game. You see how this risk is all over the place. You might make good, like you can see, right? We just added 330, right? And you'll be like, yay, I made a lot of money, You'll be excited, right? And then next thing you know, because of emotional and psychological reasons, you increase your risks, and then you're losing 123, you're losing 180. You get, once you found out that you've now started losing really high, you now start reducing your risks to things like 27, 10. You get it. You have to keep your risks consistent. You have to intentionally plan your risks. Decide how much of your capital you're going to risk per trade and stick to it. Even if your balance is reduced, unless you're working with compound interest. Unless you're compounding. And when you're compounding, make sure you're compounding both your profit and your loss. If you're running in a loss, continue applying your risks on the capital as at the time you took the trade. Same thing with profit. If you're compounding your profit, continue applying your risks on the capital as at the time you took the trade. Don't change it. When you get into loss, you now start reducing your risk, right? And when you're in profit, you start increasing your risk, or vice versa. It's going to mess your trading up. It's going to seriously mess your trading up. You can't afford to do that, guys. You just can't afford to do that. It's going to be a huge mess.
Guys, you can see how horrible your equity curve would look like when you don't know exactly what you're risking per trade. You cannot just take trades, different amount of stop loss and pips. One trade you take has 200 pips stop loss, another has 50, this other one has 100, this other one has 200. You have to know, in all of those, you have to have a particular percentage of risk you apply or take per trade. Every trade must have a particular percentage of risk. If you're not going to do that, if you don't have a particular percentage of risk, your equity curve is going to be very inconsistent. You'll just be going around in circles because you're risking more than you're getting. At some point, you get more than you risk. You come back, you risk more than you get. You lose more than you got. Just back and forth like that. You get this. That's exactly why you're not making any significant progress. Now I'm going to show you how to ascertain your risk, calculate your risk properly on your account, and you place your trade and consistently make progress. Calculate your risk the right way. Now let's say, for instance,
you happen to be taking a trade on Euro CHF. Now this is your entry. Okay, let's get rid of all of this. You put your entry right here. Stop loss just below the previous low, right there, and your take profit is here. Alright, firstly, what you can observe from this trade, we took this trade in our VIP channel some time back. Alright, so what you can observe from this trade is a very good risk to reward ratio. As you can see here, it has a reward ratio of 3:1. So what that means is, whatever you're risking, if you lose that which you're risking. If you make profit, you're making 3 times what you risk. That's what it means. That's why you say 3. Risk to reward ratio is 3. Alright? Now, let's calculate this in real time. Now, this is the platform where we calculate risks. I've shown you this platform in our previous videos. Shout out to CBIFX. They allow us to use their site to calculate our risks. What currency pair do we want to trade? Euro CHF. All you need to do is just impute Euro CHF. You impute it. The platform is going to help you search. Once the platform helps you search, you click on Euro CHF.
you'll see Euro CHF right there. Deposit currency, what's the base currency of your trading account in dollar, right? If it isn't in dollar, you can choose whichever. Now the stop loss pips. How many pips is the stop loss? How many pips is the stop loss? You have to know. You check your trade, and as we can see here, it's 61 pips. The distance between your entry price and your stop loss price is 61 pips. All you need to do is come here and impute 61. Now, if you don't know how to calculate your pips, if you don't know how to identify the pips, you could just click this settings icon. It will switch for you to be able to impute the open price and stop loss price. That's easier, but for this video we're going to be working with pips. So we said it's 61 pips. Now what is your account balance? What's the amount in your account? What's your account balance? Let's assume your account balance is $1,000. Right? Let's just assume it's $1,000. Once you've gone past that, here's the next thing it asks you of is here's the CHF price. And you can ignore that, or you just go to your trading view site or your MetaTrader 4 and get the exact price of Euro CHF of whatever currency pair is set there for you. After you've done that, it will show me how to find your contract size. Let's show you on this video as well. We've shown you that in our previous video, but we are going to show you here. You go to your trading app. This is my trading app. You go to your trading app, look for Euro CHF. Click here to show you symbol properties. You click symbol properties. At this point, you can see contract size there is 100,000. Contract size 100,000. This is very important because not all contract sizes are the same, and different brokers have different contract sizes. You must take that into consideration. Not all contract sizes are the same. Always confirm. Now we'll confirm this is 100,000. We are going to go back to the CBFX site and impute 100,000, and that has been done. 100,000 imputed. Then you click calculate. You see how easily it calculates the lot size you should be using on the trade. 0.04. That's the lot size you should be using on the trade. So if you want to place your trade, you just need to go to your MetaTrader 4 or 5 and then work with this lot size that has been calculated for you. This is how you consistently maintain and manage your risk. If you don't follow this, what you're going to be doing, you're going to be all over the place. And once you're all over the place, it's just a matter of time you're going to blow your account. It's just a matter of time. It's just a matter of time. So this is the way, guys. This is just the way. Now, I wanted to mention earlier about your trading balance. If you eventually, let's assume you have a $200, okay, let's say $170 balance your trading account. Everything, same parameters, same trade, Euro CHF, stop loss 61 pips, by risking 3%. If you click calculate, what you find is that your lot size is impossible, 0.007. You can't place 0.007 on MetaTrader 4 or 5. Right? So what does this tell you? Your account balance is too small for this trade. You cannot reach 3% of your account balance on this trade with a 61 pip stop loss. You're going to have to adjust either your account balance or you're going to adjust the stop loss. You either adjust the account balance or the stop loss to be able to take this trade. This immediately tells you you cannot take this trade unless you want to increase your risk to, let's say, 5%. You increase your risk to 5%, then you can now do 0.01. If that's okay with your strategy, that's fine. Did you understand? This is how you calculate risk. This is how you estimate. This is what is called risk management. You have to consistently do this to be profitable. Otherwise, your strategy is good, your entry perfect, your parameters perfect, but the risk is messing up your consistency, your profitability. It's messing up your trade. Do you understand? It's messing up your trade. So this is the way, guys. This is just the way you're going to have to deal with the beast called horrible risk management. This is just the way you're going to have to deal with this. Alright, guys. So without further ado, I'm going to have to leave you with this. Do this, test it out, see how it works best with you. If your account balance is too small, check out previous videos. You see how to open a cent account. Use a cent account instead. Create a cent account, work with a cent account. With the cent account, your balance is multiplied by 100 and you can do what you're supposed to do as you want to do it in terms of risk. Alright, so guys, subscribe, share this video with your friends, like and hit the notification bell so you won't miss out on the next video. Peace out, guys.